Hey, what's happening? It's Jamie. I'm just doing a quick one about locking in profits. And I've mentioned, for me, I try to lock 20 to 40%. I don't know if I'm right. Maybe I should look for higher returns, but that's basically what I've been doing. All right, so with that, I'm going to just show you what I mean. So right now, on an option call, I have a person I know that has been trading for decades, and he's successful. He makes a living from it. He loves the selling calls and puts, which I think is great. I'm just learning about that. I think it's safer. It just seems like your returns generally aren't quite as big unless you're able to scale up, meaning like you're able to buy a lot of shares that you can sell, the calls, or be able to buy the puts. If the premium is up $50, right, and you have to buy 100 shares to get that $50. If it goes down, if it happens to go down that low, you're going to be able to buy those shares on those puts. So I like the calls that are leaps, which are really far out, because it usually gives me a lot of time to recover if they just drop suddenly. So right now, I'm just showing you my Robinhood account, which I really only now trade options in, and I just do it for fun. I mean, I'll use $1,000 to $10,000, somewhere in the range. That's what I play with. I don't play with tens of thousands or hundreds of thousands or more, like some guys and men and women do. But that's what I'm working. So if I can make $100 a day, $50 a day, it's not the delta, or $500 a day. I mean, that's generally, my target is like $50 to $500, somewhere in that realm. And I try to lock in the profits when I can, depending on what I think it's going to do. So I'm going to use Lucid for a second, because I'm up, it says I'm plus 163. Now I have plenty of time. It doesn't expire until January 2023. So a year and 3 months or so, right? 4 months, 3 or 4 months. And if I look at it, I can see, well, I have $730 invested in that one contract. So meaning, like, if it went to zero or whatever, if it went down to nothing, I'd lose the $730, and that's it. And I'd have a year or a little longer than a year to maybe recover that. But I prefer not to tie up $730. But I know that I'm only risking that. That's the most I could ever lose, which isn't bad, to me. So $730 is what I have into it, and I bought it at $7.30 per contract. $730. It said I have a 66% chance of a profit, right? Well, that's pretty good. And I know the Delta Vega, I don't know all that stuff inside and out, but there's plenty of videos where you can learn that thing. So right here you can see that the difference between, let's see here. The difference between $7.30 a contract versus $8.93 contract is $1.63, I believe. Yeah, it's got to be $1.63. So I am up $163 because of the spread. Now, if I sell my contract today, I get my premium back, and I get the profit. So I like that I'm up 22%. So again, my target is 20 to 40%. And again, I don't know if that's the best practice, but that's something that I think is a pretty good return, especially since I've only been in it, I don't know, a little over a week, I think. Let's see. It should tell me when I bought it. Right here. I bought it on October 12th, right? Today is, I think, the 19th. So a week. Right? Roughly a week. So if I make 22% on my investment that week, isn't that a good return? I mean, if somebody said, hey, give me $100, I'll give you back $122, right? $122. That's 22% in 1 week. If it was 1,000, right? I'm sorry, not 100, but if it was $1,000, I'll give you back $1,122. Am I doing the math right? Because 10% would be. I'm doing my math wrong. What if you gave me $100 and I gave you back 22%? that's a good return on your investment, right? Whatever that number variable is, $100, 1,000, 10,000, 22% on your money is a good return, especially in 1 week. Take that all day. If I could do that every week, I would do that. Some are less, some are more. So that's why I do that. Now, the reason why I was thinking of getting out is when I look at, this is the Webull chart, which I just glance at. And I look down here and I say, okay, the relative strength index, which is, again, just an indicator, is above the 70. And usually that tends to mean, it doesn't mean it can't stay up there and continue to go higher or stay there or come down a little bit, but it usually means it's overbought, right? Yeah, overbought. And that means it's going to come down. Now, so I'd rather lock in the profits and wait for it to come back down again and repeat that same process. If I can make another $160 in another week, right, for my $700, I mean, that's, to me, is a good return. So there's my 25% on $700 versus it's sitting in the bank not doing that. It's doing less than that for sure, or under my pillow or wherever you put it. So that's the diversity. Now, I'm just sharing that's my strategy. It doesn't mean it's going to work for everybody. There's people that have all kinds of opinions, and certainly, I'm just telling you what I'm doing. The Neil one is another one where I'm like, oh, I'm up $233, right? And if I go back to that one, for example, I bought that one for $540. I bought one contract for $540. Right now, it is at $773 per contract. Okay, so bought it at $540. It's currently before the market open is at $773. My contract does not expire until the end of next year, so plenty of time. So the market value today is $773. So I am up 43%. Back to my own personal strategy is 20 to 40%. So I'm like, all right, I mean, it'd be good for me to lock that in, and then instead of having fear of missing out, the FOMO thing, I'd rather just lock in that profit and put the $233 in my profit, and then either reinvest, wait for that to come back down, or look for other opportunities. And then I'm out of here. Let's see. So I will get information from chat rooms just to look up stuff, Twitter, friends, people that are successful, that give me trading ideas. And someone was telling me about Carnival, and he uses something called Snyder's List. I don't really know too much about that yet, so I don't have much to say. But I looked at that. I mean, I know that the COVID thing's lightening up a bit. Airlines are coming around a bit. So I looked at Carnival on a 2-hour chart, and it seems like it's pretty low. Again, just peeking at the RSI. I haven't done any deep research on the company and what projections are. But I look at trends and quick snapshots. So I see that on a 4-hour chart, it seems to be back on an uptrend from $19. From 19 to 23 isn't a massive margin, but even with the dips, it seems like if I look at it, I go, okay, down, up, down, still higher than higher lows, right? Right. So now it probably will go up. Would be my prediction. Again, doesn't mean it will do that, but I'm looking at, it's down low on the RSI, it's down low on this trend, which it seems like probabilities is it'll probably go back up again. You can look at a daily chart and see that a while back it was way up, higher, right? Weekly, right? I mean, we're up at $70, so there's a lot of room there. I mean, obviously this drop has to do with the pandemic. You can see right there, from here to here, around that time frame was the pandemic. That's January 2020, and probably about a month or so later, that's March. That's when the business took a huge hit. So it seems like it's recovering. It's starting to correct. So there may be some opportunity there to make a few $100. So let's see. If I go back to Robinhood and I look up CCL, let me get myself out of the way here. Let me go right here. And I go to trade options, and I say I want to go out maybe to January 2023, right? And I'm going to do a call. And how much is one contract? You know, right now it's at $23.19. So, I mean, I probably would buy the one in the money. All right, I got a 62% chance of profit. And so I like that. So if I go down here, the spread is only 15 cents, meaning here to there. So it's a pretty tight spread. And I can see how many people are interested, which you can look at any platform. You know, so open interest is 12,000 people that are interested in, and you know, there's a lot of activity in it, so that looks good. And so now if I was to buy one contract and I said, okay, it's between 175, so let me see if I could buy one at, one contract, and if I could buy it for 4.85, I don't know. Right? So it's going to cost me $485 to buy one contract and hold it for a year and a few months. Now, I'm already in the money. My premium is $485. If it goes down, I'm out to $45 if it doesn't recover in over a year. But if it does go up, and if I say, okay, well, even if it gets back to that level up here, you know what I mean, this range, $40. I mean, $23 to $40, which is quite a ways, right? But there's a lot of opportunity to get back to that previous level if it's gaining over the next month or two. So if I could take that $500, make another 20 to 40%, right? Back to my calculations. If it cost me $500, I'm just being simple. So 500 times point, let's say 30%. So if I make $150 to $200 on that contract, I make 20 to 40%. I make anywhere from, I guess, $100 something to $200 something for my $500, and hopefully I could do that in a week. You know, rinse and repeat. Again, that's the strategy. So I think some of the money I take out and I put into other stuff, but again, I'm not really sure what's going on with Robinhood with some of those SEC things that are going on and the cryptos, and you know, I'm a little nervous. Not nervous, like it's going to really affect me, but I like Robinhood for that alone, for the option stuff. But I can do it on Thinkorswim. I could do it on E-Trade or Fidelity. You know, you can do it on Webull. There's plenty of places where you can buy and sell options, whether you use margin, I don't, or just you know, cash. But anyway, that's how it works. That's how it works for me. I'm not a financial advisor. I have no advice that's going to make you rich or guarantee any success. There's plenty of people out there that you can learn so much. Well, that's how I learned a lot of stuff. Again, I've invested hundreds of hours, over 1,000 hours, in either taking courses or listening to videos and actually implementing, and failure and success. But this is what's working for me today. All right, that's it. See you later.